Cash is king, credit is power. Money talks, good credit holds conversation. Personal credit opens the door, but your business credit, it takes you to the moon. It gives you unlimited opportunities. Business credit. What's up, Bag family? It's Coach Darius D. Brown here, and we're back with another episode 51. And yeah, man, hope your week is off to a great start. And we're gonna dive right into this, man. So this week we're gonna be doing something a little bit different. We're gonna be breaking our episode up into two segments, right? Specifically outlining the importance of personal credit as well as understanding business credit, right? Because what we want to do, the objective is to ensure that not only are we providing the value, providing the resources, but you are truly understanding and being educated on how to properly leverage these two key components that can help you reach your overall business goals, credit score goals, financial goals, right? So it's essential that you stay tapped in. It's essential that you stay plugged in to the channel, man. And you guys already know, make sure you like, subscribe, share with someone that you know that can benefit from this value, from this content. And we appreciate the love. We appreciate the support, right? We hit 1,000 subs. Now we're going for the gusto, straight for 10,000 subs because we are in heavy, high momentum, all right? So you guys see it, right? Personal credit matters more than you think. The economic landscape that we are currently in, if you are not taking your credit, if you are not taking your finances serious, you are going to continuously be caught behind the 8 ball. I cannot stress this enough. You are going to continuously be caught behind the 8 ball, paying high interest rates, being denied, right? You're going to be dishing out, just throwing money away, throwing money down the drain, right? And we don't want that for you. We want you to be able to understand leverage, the leverage game, good leverage, okay? So the key points that we're going to be discussing is understanding that what the banks are looking for, what the lenders are looking for, understanding that the banks, they do not know you, right? Again, documentation beats conversation. What is on paper? What is documented? Not what you're saying, but what is documented. History, paper trail, right? Lenders trust data, not your intentions. I'm going to say that one more time for the people in the back. Lenders trust data, not your intentions, right? We talked about it last week. Your character, your credit dictates your character. Like, lenders are able to see that. The banks are able to see that, right? Like, let me see what this person is really about. Let me just look at their credit. Let me look at their financial portfolio. Let me look at how responsible they are, right? And if they see that you're responsible, if they see that you've been able to establish, good faith with other banks, with other lenders, then of course they're going to give you their money. They want to give you their money. But in order to do that, you have to establish good faith. You have to show in real time that you're responsible enough to be able to leverage their money. All right. And then overall, essentially, your credit report tells the entire story. It opens up that frame and allows the lenders to see, okay, this is their story. They're late payments. They're constantly late paying their bills. They're constantly carrying a high credit card balance every single billing cycle, right? Those two data points itself already kind of like gives the meat and potatoes of your story. If you're constantly late on paying your bills, it's already a red flag in their book. If you are carrying high credit card balances, it indicates to the lender that your cash flow has run low. You're not making enough income. So what you're doing now is you're maxing out your credit cards, right? If you're making enough income, then you're going to, whatever you're using on that credit card, you're going to pay that back, right? Because again, it's good leverage. So your credit report tells the overall story, not just a little bit of the story. It tells the entire story when it comes to your financial situation, all right? Most business owners start with personal credit, all right? Again, if you are a business owner, right? If you are new to this channel, if you have been rocking with us for a while now, you understand that we constantly inform you guys that if you are a business owner and you are looking to establish business credit, then you need to understand it starts with your personal credit. All right? Just because you have an LLC, it doesn't automatically equal funding. We have to stop listening to all of these gurus on social media, online. Oh, you can start an LLC today and you can be eligible for funding. It does not work that way. It does not work that way. Just because you have an LLC does not equal funding opportunities. Like, we have to be realistic about the situation here, right? Most new businesses require a personal guarantor, a personal guarantee. Most new businesses. If you've been in business, 5+ years, 10+ years, you've established history, right? So lenders, they know that. You probably have taken out a loan in the past. You paid it back within an ample amount of time, right? You've established good faith. That's what we mean by establishing good faith, right? You now understand, okay, I built trust with this lender, with this bank. So let me go over to Bank of America. Let me show them, what is Bank of America going to do? They're going to go to that original bank to see what that history looked like. So in real time, they're able to see that documented. Oh, wow, they took care of that loan. They paid it back on time. They were never late. They never defaulted. All right, cool. And in the interim, what are we doing now? We are continuously building that business credit, right? Cash is king. Credit is power. Money talks. Good credit holds conversation, okay? Personal credit opens the door. Personal credit opens the door. But your business credit, it takes you to the moon. It gives you unlimited opportunities, business credit. But we have to start with the personal credit. Examples: business credit cards, vehicle financing, startup capital, lines of credit. Right? You can put your vehicle under your LLC. Get a nice little tax break there. Talk with your CPA, talk with your accountant. They'll be able to work it out, the logistics, so you can get a nice little tax break there. But you have to understand how to properly leverage it, right? Understand what are you using your business credit cards for? Are you using it for your business, supplies, equipment, travel? Of course, if you're going on a business trip, of course, you're going to use your business credit card, right? You're racking up those reward points. You understand how to properly leverage your reward points to your advantage, right? You can travel for free, stay at the finest hotels for free, right? Rental cars for free, because you know how to play the leverage game. And the LOCs, lines of credit, same thing, credit cards, leveraging it to your advantage. But here's the common credit mistakes entrepreneurs make. They're constantly late. Again, we got to focus on those data points, those 5 data points. Late payment history, amounts owed, utilization, length of credit history, new credit, mixed credit. I'm going to say that one more time for the people in the back. Payment history, amounts owed, utilization, length of credit history, mixed credit, new credit. I'm going to say that one more time for the people all the way in the back. Payment history, amounts owed, utilization, length of credit history, mixed credit, new credit. When you understand the power of your data points, you will break down financial barriers. So, common mistakes, credit mistakes entrepreneurs make. Put your stuff on auto pay so you don't forget. If you don't want to put it on auto pay, set up reminders throughout the month. So you're not one late payment can drop your credit score anywhere between 50 to 120 points, people. It is harder to remove a late payment than it is to remove a collection account. Just think about it. You are on your way to get you're right at the finish line to get a business loan or a home loan or auto loan, and you accidentally get a 30-day late. That 30-day late is harder to remove than a collection account, than a $10,000, $20,000 collection account. Do not play when it comes to your payment history. That's 35% of the overall makeup of your credit score. This is why one late payment can drop that score 50 to 120 points, because it's 35%. Think of a pie chart, right? Payment history, that's 35% out of 100%. That's a big chunk. So set it up on auto pay. If you don't want to set it up on, and here's the thing, these creditors, they're throwing out incentives by you setting up your services on auto pay, your monthly subscription on auto pay. They're giving you a discount. So you're saving money while being responsible. It's all about shifting this, people. As an adult, it feels good when you're handling business. It feels good when you are responsible, right? High utilization. We talked about it earlier. These are the common credit mistakes entrepreneurs make. They're just swiping, and there's no strategy. They have no strategy whatsoever. They're not paying those balances back down, and then they're like, wait a minute, why is my credit score so low? Because amounts owed, which is your utilization, that's 30% of your credit score. 30%. So if you're carrying a 70%, 80% utilization percentage, if you're walking around with an 80% utilization percentage, what do you think is going to happen to your credit score, people? It's going to tank. And it doesn't matter if you're working with the most reputable credit repair agency. Yeah, we can get those negative items removed. But if you're not doing your due diligence, right, as the consumer, as the client, paying your bills on time and keeping that utilization percentage, your score is not going to move. This is why data points, understanding your data points matter. All right. And then collections, allowing things to fall into collections. This is essential because here's the thing. Can we keep it real? Because this is keeping it real with the Browns. You cannot run away from your problems, right? You can't fix what you're not willing to face, right? So if you get caught in a bind and you fall into a default and then the creditors are reaching out to you and you are ignoring them, you actually are making the matter worse. Communication is essential. Communicating. We're all adults here. We got ourselves in this situation. We have to work getting ourselves out. There's always a solution to your situation, to your problem. Don't run away from them. Trust me. These creditors, they're going to get their money by any means. If they don't get it from you, they're going to get it from somewhere else. And that's another conversation for a different day. But they're going to get their money. So no collection accounts. And again, having collections, having bad credit, it's not a life sentence, people. It's not a life sentence. You can always fix it. But you have to be willing to face it. Right? And be willing to get assistance. Be willing to get help. Understand that you can't do it by yourself. And that's okay. We all have gifts. We all have, gifts, talents, knowledge, resources. Leverage those resources. Like what you're doing now. You're tapped in. We appreciate the support. You're tapped in on a week-to-week basis because you know in real time the value that we're providing to the marketplace. A lot of you guys are leveraging the value that I'm giving you guys, and you guys are reaching out and saying, man, it works. Like, this is no cap. Like, Coach D, this works. Your strategies work. Right? And then lastly, out of the 4 most common credit mistakes entrepreneurs make is co-signing for others. It's probably one of the biggest one. Because here's the reality. If you don't trust that person, and even if you trust that person, understand life happens. Things happen, right? But if you co-sign for someone, you're on that loan. You're just as important on that loan than that main signee. So if they fall into a default delinquent, who does that hurt? It don't just hurt them, it hurts you. I know, listen, we have big hearts, we want to help, we want to serve, but again, if you have your sights on something and you know that you're looking to accomplish something, then what you need to do is you need to understand that, wait a minute, right now, I would love to help you, I would love to assist you, but right now I can't, right? I once I get over this, then cool. But then again, here's the thing. They need a co-signer, put them on game. Tell them, listen, just get your credit right. Get your credit where it needs to be. Maybe this is not the right time for you to be trying to be a signee for an auto loan or getting a new. Get your finances in order. Get your credit where it needs to be. Give yourself about 6 to 12 months, which really, when you really think about it and put it into perspective, 6 to 12 months is not a long time. We get people to be like, man, 6, 12 months, man, that's a long time to be fixing my credit. But let's put things into perspective. How long have you been walking around with bad credit? The average consumer is walking around with bad credit 10 plus years. So when you put it into perspective, oh, wait a minute, I've been having shitty credit for 10 years. 6 to 12 months is not a long time when you really think about it. But I get it. We live in a microwave era. Everything has to be done like this. There's no sustainability in that. If you want overnight success, overnight results, again, you may get it, but there's no sustainability there. Make sense? And then lastly, this is the last one actually, applying for too many accounts. When you start applying for too many accounts, that's a red flag to the lenders because to them, you look desperate. You look like it's almost like having too many inquiries. We've had clients where we are looking at reviewing their credit report. They have 200 plus inquiries. Wait a minute. And you may not even know that. You may have went to a dealership to go shop for a vehicle and they're shopping your credit score around and you had no idea. You're thinking they only ran your credit maybe once or twice, but they're shopping your credit around. So now you have 200 plus inquiries. And when you try to go apply for something else, the lenders are like, they're going to deny it. And you're like confused, like, why did I get denied? Too many inquiries, too many accounts open. Do not apply for too many accounts. All right. And maybe on another episode, we'll break down as far as how many accounts you should have, right? Where it makes sure it creates a level of trustworthiness when it comes to lenders reviewing your credit profile. It keeps everything streamlined. It keeps everything intact when it comes to your credit report. We'll probably discuss that on another episode. All right. And here is the credit score sweet spot. The credit score sweet spot, people. Y'all ready for this? Pre-COVID, people were like, hey, 5, maybe 6, anything like 600, 620, 640. You can get approved for certain things, right? Not after post-COVID. After post-COVID, things went up. The economic landscape drastically changed when it came to the scoring credit score models, how people are approved. Even now, getting a vehicle, right? You can have substantial credit. You can be making decent income. That does not mean that you're going to get approved for that particular auto loan amount if you have not established history. So, for example, let's say the highest auto loan amount you've ever been approved for was $25,000. Now life is pretty good. currently. You're now making about 6 figures a year, and you go and you try to apply for another auto loan. This auto loan now is like $60,000. You may not get approved for that loan because the lenders are looking at, well, wait a minute, I understand that they had that $25,000 auto loan and they were doing their due diligence. They were paying everything on time, but they never had a $60,000 auto loan. Like, how can we? So it's all about, there's levels to this. It's levels to it. You got to move. You got to show them, okay, if I can handle 25, I can handle 40. If I can handle a $40,000 auto loan, I can handle a $65,000, $70,000 auto loan. There's levels to this. Unless you buy the vehicle outright, or you leverage our strategies when it comes to your business, leveraging your business and putting it under your LLC. But again, personal guarantor. This is why it is essential. Don't wait to fix your credit and get your finances in order when you need it. Do it now. So let's discuss. 680 plus is where you want to start. 680 plus, 700 plus, 740 plus, 780 plus. We actually recommend anything under a 700. We got a little bit more work to do. We want to get you as high as possible because understand, lenders from the home loan side, auto loan side, business loan side, personal loan side, there's different credit scoring models out there, right? So for example, Brown Assets Group, Brown Solution Services, we leverage the Vantage score. We leverage the scores that are designed by the credit bureaus, right? So we always advise our clients, our students, to ensure that you get that score as high as possible. If we're looking at your Vantage score and it's at a 780, and you go to your lender because you're looking to buy a home, it may be maybe like a 10, 15 point difference, right? Which is not a large margin, but still, we want you to get it high because there's several credit scoring models out there, if that makes sense. All right. Again, the higher the score, the lower interest you pay, the better financing options you receive. Little to zero deposit down payment down. Just think about it. You get pre-approved. We always advise credit union. Anyone that's connected to us, like family, friends, we're going to refer you to our credit union so you can open up an account, establish that good faith, because credit unions, just history has proven itself. Credit unions, they provide better financing options. Right? Just think about it. You go to your credit union, you get pre-approved through your credit union, right? Now you're pre-approved, they give you a blank check. You let them know what you're looking for, the auto loan amount. Now you're pre-approved. And check this out. Here's the sweet spot. They only ran your credit one time, with usually it's Experian. So they only ran your credit one time. So you got one inquiry, right? Maybe two. They may run it with Experian, TransUnion. But still, it's just two inquiries. Opposed to 50, 100 inquiries. That's absurd for one transaction. That's just crazy, right? So now you're pre-approved. You go to the dealership. You have this confidence now. I know I've been pre-approved already. They've already run my credit. This is the vehicle that I'm looking for. I'm trying to be in and out within like 30, 45 minutes. That's a different type of flex, people. That's a different type of flex. And we've done it. We've shown our students, we've shown our clients how to do it. And you do not have to put any money down. Low interest rate. So your monthly car note, typically 780 plus credit score. You're saving $300-$400 when the average person that has poor credit, they're spending 3 times that. And they're calling it a blessing. That ain't no blessing, because 6 months from now, you're going to be stressing. You better take it as a learning lesson. You hear me? So again, if it's to be, it's up to me. So credit is about access, not just scores. I'm going to say that one more time for the people in the back. Credit is about access, not just a score. All right. Again, we're going to talk about it. Lower interest rates, better approvals, better financing options, more negotiating power. You have more power there on the negotiating side, right? Faster growth. All right. Your personal credit is the foundation. If the foundation is weak, the building can only grow so high. If the foundation is weak, the building can only grow so high. So understand, your personal credit matters. It matters. All right. So I hope that was some good information for you guys, man. I hope you were taking those copious notes. Again, if you have any questions, we'll have our links in the description below. Our booking link, if you need to check your credit, right, your personal credit, and you are subscribed to our channel, Keeping It Real with the Browns, you're able to check it for $1.99. We'll put you on a 7-day trial. If you have any questions after you create the account, book a call with us. We'll be more than happy to go over your credit reports with you, with all 3 credit bureaus, to see exactly where you stand, where you can be in the next 3 to 6 months, and giving you that realistic roadmap to helping you reach your credit score goals, your financial goals, right? We are firm believers, and our objective is, as long as we put other people in position to win, we will always win by default every single time. All right. So make sure you guys share this with someone that you know that can benefit from this. And until next time, we'll see you soon.